morning, everybody. It's Friday, May 10th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to them during the show. Overnight markets had July corn up 2.5 at $4.59. July soybeans were up 3/4 at $12.09 1/4, and July Chicago wheat was up 13 at $6.50 1/2. Nothing in the way of export sales announcements this morning. It's actually a pretty slow news morning relative to what we've been covering the last couple of days. We will have the USDA report out at 11 o'clock Central, bonus edition of the War Room at 11:05. So we'll digest the numbers, have a few initial thoughts as we progress and head into the weekend. And we were talking a little bit here before the show, just kicking around the room, but it's just seems like a foregone conclusion from everybody you talk to or read about that it's, obviously going to get a bearish tone to the numbers today, but, not to state the obvious, it'll be very interesting to see what, overall money and trade wants to do here as we head into the weekend, Justin. So a couple comments to start, and then we'll move it around here.
Yeah, I mean, I think you kind of have the average guesses here, and I think we all have a pretty good idea what will come out. Obviously, there can be shocks or surprises. I think the most interesting thing will be how the market reacts afterwards. We've had a sell-off. I've seen a big rally and then a sell-off going into the report. Probably got some, a lot of farmer hedging. I think we've seen a lot of farmer hedging on this entire rally. Just thinking it's an overall bearish market. So it'll be interesting, I think, to see how we react if the funds or investment type money comes in to buy this report regardless of the numbers. Wouldn't surprise me, but we'll see. I think the biggest things that we talked about yesterday are going to be what they do with South America. I think we'll most likely are going to use the yields that we've already seen and the acres that we've already seen from previous reports. Maybe some fine tuning on demand numbers here and there, but I think we'll be probably in the zone for what the average guesses are. Obviously, we talked about yesterday. There's a huge range of guesses on ending stocks. I think if you take Dustin, we talked about this. Take the March acres and kind of the 181 type yield. You're in that 2-3 type carry out. Either way you look at it, it's not going to be super friendly. I think the market's kind of probably going to move on beyond that and see what we would think on yields and weather going forward. So.
Sure. No, that's good points. And, everybody's been talking weather. This morning's run, there's a pretty good drying pattern for, the next 5 to 7 days. So we hope some of these pockets can dry out. We'll get some advanced progress in some of these deficient areas. But by all accounts, I think we're progressing nicely, where we should in the next 10 to 14 days. Would you guys agree?
Yeah. And I'll let you guys talk too, but I don't think the market is trading that we're not going to get it planted. Right. We're going to get it planted. I don't think the market's worried about that. If we didn't think we were going to get planted, we'd be much higher prices, right? So sure. I attribute it more to just kind of being overly short for the time of year, enough uncertainty that building some premium into the market. I don't think we're in any kind of panic mode on not getting it planted or major yield reductions or anything like that at today's date.
No, very good. Rylan, we've got a little bit of time here, but let's talk about cattle, wrap up the week on the cattle side. Yep. With the USDA report and not a lot of fresh news here. We'll go to cattle early and wrap that up.
Yeah, everybody's kind of in the same boat here, I think, in the cattle side of things. Cash has been really slow to start this week. We've seen some 187 trade in Kansas, some 296 in Nebraska. And, last week, those would be higher prices from last week. It's just we're not seeing the bulk of trade yet. So the market's kind of waiting to see here. I think what happens there, one of the bigger kind of issues here is that the beef market just can't quite get that push right now, and could be something a little bit more weather related. I think just in general with the mentality of looking at just how wet everything's been and kind of on the cooler side. So if we do start to see this pattern of maybe a little bit warmer, some better weather ahead, some drier stretches, I think you're going to get a little bit more of a favorable kind of demand response just in general from there. But it's hard to say. I mean, we're at such a high price relative to historical norms that, there's just the downside risk is here. At some point, feels like even the outside markets are starting to get a little bit curious as to how the U.S. consumer is going to be going into the summer. So I think that's something to keep in mind as we go forward. But the feeder market will be watching the grains pretty closely here at 11 o'clock, just to see if we get a strong reaction, either up or down. That could affect prices pretty aggressively intraday, and funds are still leaning on the long side of the market. So I think they want an excuse to kind of to get back in to add here rather than subtract or lighten up. So we'll see how that goes. And on the hog side of things, we're just kind of hugging the 100-day moving average. We just cannot get any support here in cutout right now. And dress weights were pretty strong in both places, cattle and hogs, this week. So just you've got that kind of headwind to deal with, and the managed money is still overtly long the hog market, which I imagine we're going to see a considerable down here on the commitment of traders report today. So I think it's something just to keep an eye on. But overall, it just seems like we've traded a lot of the negative sentiment in hogs for right now, and trying to find some technical support here and maybe some seasonal demand if the weather can start picking up.
Very good. Rylan, have you heard anything? Have they made any headway on bringing back some of those reports, or are we still in the report slashing mode that we had from?
Yeah, still. I mean, as of
right.
right now, the July cattle inventory report is still not on the table. I think the last time this happened, it took them. We missed one cycle, if not two cycles, I think, at one point. But it can come back. It's just a matter of how strong the lobby is that wants the data, for the public, and if these guys can get their funding, so it's just a wait and see thing. It's a big comprehensive report, and they've always said that this is one of the more costly reports in the livestock industry. So it's the one that's always going to be on the chopping block, even though it's really pertinent data and really going to affect the market here, just because we're really kind of hyper aware of if the market's going to expand or contract with these prices being where they are. So I think it's more of a kind of wait and see thing. I haven't heard anything, unless if somebody else may know in the comments, but I have not heard anything.
Yeah, I was thinking about it this morning because it's been pretty quiet. It was kind of a big deal there right off the bat, and then it just went away a little bit. So
yeah, well, I mean, there's not much you can do once they axe the report. I mean, we've dealt with shutdowns. There's huge gaps in the data from some years, but usually they kind of they'll kind of backdate the stuff and release it later. So, but yeah, nothing new. I mean, we're kind of flying blind for the next, or at least the second half of the year, as far as the total inventory. We're just relying on cattle on feed report for the most part.
Oh, very good. It's Friday, and with that, it is Fun Fact Friday. So Brian Williams will enlighten us with some fun facts here.
Can't wait.
Friday.
Yeah, thanks, Dan. I appreciate it. Happy Friday, everybody. Hopefully no one needs to know this fact, but according to a 2007 study, surgeons who play video games at least 3 hours a week perform 27% faster, and more importantly, 37% less mistakes during the procedure. So what you take out of that is, if you do have to go in for something, you might want to ask your surgeon, do they play video games, and for how long? So I don't think they're playing games that I grew up with, like Donkey Kong or Cubert. It's probably like, what is that, GTA or Fallout
Fortnite.
or something like that. Fortnite.
Yeah,
something like that.
right.
So their hand-eye coordination's probably gotten a lot better. So just something to know.
Does it work for trading?
Yeah, right.
Wow, it's a slow news day.
Yeah.
Dan, actually, if we could kind of go back to the report for a second, though, too, just because I think I've just seen some comments online about how, the USDA has lowered their yields in May, and I do think that's an interesting topic because, they did not lower their yields in the 2019 May report, which this is about the time that the market started panicking that we really weren't going to get it planted in time. But they decided to lower it in the 2022 report. and they lowered it by 4 bushels due to the planting pace. So, the USDA could be a little bit all over the board. I don't know what they would write in here. I would also note, though, that was about 3 days before the high in 2022 when this report came out. We had a seasonal high, coming out of that, war time frame where we were much higher prices at that moment. But we have had a lot of focus on that, I think, in online forums and things like that. What's the USDA going to write down? And at the end of the day, it really is, when you're talking about U.S. numbers today, it's about the USDA's economist opinion. There are no real new pieces of information coming from the USDA today on the U.S. numbers, that is. Now, maybe they care about what they say for wheat or what they say for South American production. But there's no boots on the ground information that we're going to find out and learn today that's different. So I would keep that in mind when this report comes out. It could be quite a bit of deviation, as those average estimates are showing big difference, 500 million bushels between low and high guess of new crop corn carryout. But the market has its own opinions too. And are they going to care, how much weight does that USDA economist have?
Yeah, I think that to that point, I think the reaction after the report will be more telling than the numbers itself, as far as how the market, the market as a whole thinks about the current situation.
Yep, exactly. Yeah, a lot of the noise can be, kind of gone after this. And if we are, at 2022 is a good example. There's a pretty bullish report. We made the highs a couple days later. I don't think on that report necessarily, but funds are very short coming into this time frame, and we have to ask ourselves, why do we usually make seasonal highs in May and June? Is it because we're fearing that we're not going to plant the crop in time? I don't really buy that, right? We don't have a look at pollination weather yet, and we had about as a friendly of a report as we could have asked for in that March 28th report. Low acres, better, lower than expected stocks, and 90 million acres of corn. We're not going to have that number till late June of what actually got planted for corn. And we didn't have the easiest process of getting it into the ground. And we had a high bean corn ratio the entire time. So I think just keeping that in the back of our mind for corn in general is that university data still shows us we're pretty far below cost of production. Doesn't mean we shouldn't be hedging, but I think everyone's gotten pretty comfortable that this is just where the corn price needs to be. And I would say it doesn't feel that sustainable without some major cost changes in future years.
I agree. Anybody else with additional thoughts there?
No, just looking at, we've had obviously these nice rallies. We're still below the 200-day moving averages, so we've had, I think the market's at this inflection point of, is this just the big rally in a bear market, or is the market turning around and making, some kind of a move higher, right? So I think maybe rightfully so. Right now, everyone's treating it as, okay, that, kind of highs are in, and this was the rally we all need to sell. To Dustin's point, the market does a really good job of mentally changing everybody. So we're at prices that most farmers, were insulted by if you'd said to sell 480 corn, and now everyone's been hoping for 480 to $5, right? The market does a really good job of changing people's mentality on what price means. And I think it's just really important to just really assess what that price means to your operation. I think underlying to Dustin's point, it's not saying that you shouldn't sell it. We're not going to, maybe we are going to 350, right? But it's really important to know, how your crop insurance fits in, how all, how strategies will affect the whole overall performance, not just worry, to be obsessed on price. And I think that's kind of what a lot of people are doing right now. We were at 420, so 480 looks too high. Before we were at $6 and 520 looked way too low, and no one's going to sell at 520 because we were just at 6, right? So the market does a really good job of, switching people's mentalities on what price means.
It's a very good point. And we will as we've talked about a couple of times here this morning, we will look at that report. It'll be out at 11 o'clock Central, bonus war room at 11:05. So we'll have our thoughts and reactions to the numbers. We just came into the open here. We got July corns up 2 3/4 at 4.59 1/4. July soybeans are up 3.5 at 12.12, and July Chicago wheat's up 12 at 6.49 is the last there. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Hope everybody enjoys the show. We will be back here at 11:05, and we'll talk to you then. Thanks a lot.
Thanks.